Hey, good afternoon. Wanted to catch up with everybody for a quick market minute. It's been a little while since we've done one of these, but here recently we've seen a decent little sell-off happening in the market. What I would tell you is based on the metrics that we're looking at, more likely than not, what we're watching is profit taking take place. And one of the reasons that we say this is there's a couple things that we look at when we're looking at broad market drawdowns versus sector specific. And so when we look at this sell-off that we've been going through here over the past couple days and past week, really it's been isolated to the tech trade, right? And so there's some concerns around some of the valuations on some of the AI companies and stuff like that. I'll tell you that based on what I'm looking at and based on what our team is looking at, I do not think that the AI trade is overvalued at this point in time. But I do think that we're seeing profit taking and maybe some rotation out of tech into some other areas. Generally, when we start to become concerned is if we were to see 80% of the sector or the market start to sell off, then we would be concerned about something a little bit more macro focused. Maybe hard economic times coming down the road or something like that. And then also too, recognize that a lot of the uncertainty about whether or not the Fed is going to cut rates in December is still very real, right? There's some concern, there's some rising speculation that the Fed may not cut rates again in December like they originally had planned to, simply because a lot of the data that they use to determine whether or not they're going to cut rates did not come out due to the government shutdown. So we've come through the government shutdown, the government's back open, that kind of stuff. We don't know. There's some uncertainty around whether or not the Fed cuts rates. We do know that Jay Powell's last comments were a little bit hawkish, if you will, meaning a lot more reserved on the idea of cutting rates. We still have some headline inflation around the 3% mark as of the last readings that we got, which is still above their 2% target. Albeit I would say that that's not too far outside of the norm of what we see in inflation, for inflation year over year, and that kind of stuff. Tariffs really haven't spawned the inflation numbers upward like people expected in the very beginning. In fact, we're starting to see some economists come out and talk about how tariffs might actually be good for inflation. I don't know. I think the answer is probably somewhere in the middle of those two. But in any case, looking forward into the next year, sell-offs like this, I see these as potential buying opportunities. I do think that we'll maintain volatility over the next 12 months. I think it's likely that we continue to see a decent amount of volatility. There's a lot of stuff that's being negotiated on the trade front. There's a lot of things happening on the macroeconomic front. But again, I look at these things as times to be able to potentially buy in, and as opportunities, for good companies that have gone on sale. As of today, NVIDIA is supposed to be posting earnings today. That'll determine, I think, a lot of the direction that we see have happen. By the time you guys see this, we will have figured that part out. But short term, what I would say is remember, each year the market will retract at least once throughout the year, about 15%. I don't know that we're going to see that kind of drawdown going into the end of the year, but it is possible. I still think that we'll still, likely see a uptick towards the end of the year and the market to finish strong for the year. But it's been a little while since we've had a good actual consolidation period. In fact, earlier this year was the first real pullback that we had, and that was more of a knee-jerk reaction to the tariffs being introduced and that type of thing. So we'll see what happens moving forward. But right now, on an economic front, there's generally speaking, our economy looks fairly good. There are some areas of concern. We are seeing an uptick in consumer credit card defaults. We're seeing an uptick in auto loan defaults and that kind of stuff. The other interesting dynamic that we've started to notice is that the upper 10% income earners are the ones that are really driving the economy right now. So we've seen a decoupling from the middle class driving the economy to the upper 10% income earners. And so it'll be interesting to see if that dynamic shifts back to the middle class going into next year. And so, these are the things that we're watching. I always want to keep you guys up to date with what we're paying attention to and that kind of stuff. Generally across the board, everybody that we associate with, everybody that we work with, all of our team members, and then also people outside of Crest that we, converse with on a regular basis, and some of these companies manage a lot of money and stuff, and they do a lot on the macro side. But generally across the board, nobody's expecting a recession at this point in time. So does that mean that we're smooth sailing in through next year? Not necessarily. Like I said, I think we'll still continue to see volatility. But I think at this point in time, if I were going to project out what we would see in terms of growth in the market, I would say high single digits, mid to high single digit returns for the next year are very likely. That'll start to become a lot more focused as we get into next year. There's a couple things to keep in mind. We cut rates for the first time back in July, I believe it was at this point in time. Anytime the Fed has cut interest rates and the market's been within 1% of an all-time high, the average return over the next 12 months is about 15%. So that doesn't mean that this is necessarily going to happen in this case, but it gives us a good indication of the direction the market is likely going to continue. Remember, the old adage is don't fight the Fed. So if the Fed is cutting rates, we're being rewarded for taking on risk being investing money. And so, I think the likelihood is that interest rates continue a downward trajectory, albeit I don't think that it's going to be back to COVID era type of interest rates. I think we go to more of a neutral rate, which would put us around a 3 to 3.5% interest rate. The Fed has indicated that they plan to start quantitative easing again. What that simply means is they're buying bonds, and when the Fed is buying bonds, they're pushing more money into the system. I don't think that we'll see, inflation tick up much higher, just simply because consumers really don't have the capital that they had coming out of COVID. So during COVID, we saw consumer savings accounts explode to the highest levels that they've ever been. That's now been pared back down to where most consumers are either breaking even or actually in a negative position, especially when we talk about the lower income earners and that kind of stuff. So I don't think we're likely going to see the inflation numbers continue to tick up. There is some still concerns around how the tariffs work and whether or not they will give rise to inflation, whether that gets passed off to the consumer. But as it stands right now, we really haven't seen that particular item push inflation higher. So maybe in some areas of our economy, we've seen it, push prices higher, but in the broad economy, we haven't seen that play out. So again, want to make sure you guys are up to date with everything, what we're looking at. Very simply put, I would say that, pullbacks like what we're seeing right now are buying opportunities, and we look at it as being able to buy good quality stuff while it's on sale. And so, look for us to reach out to you here over the next little bit, talk through that. I think it's a good time to look at dollar cost averaging. We've used volatility this year as a way to dollar cost average into different things, and most portfolios have done very well because of that. So I think that that's likely going to continue soon, and that type of stuff. If you guys have questions about your accounts and need our help with something, feel free to reach out. We're here to help you, and we look forward to talking to you. And if I don't talk to you before then, you guys have a happy Thanksgiving and a Merry Christmas. And I'll talk to you guys again real soon.